The NNPC talks about the potential of the oil and gas sector. The Nigerian German Chamber of Commerce hinges on the need to increase skill acquisition in the country. Plus, Standard Chartered is to increase its operation in Islamic banking in Africa. Hello and welcome to Business Incorporated. Thank you for joining us. I am Bolaji Akinwale. Let's get started. We'll start off with the Bank of England Governor Mark Carney's plan to remain at the Bank of England, and experts say that is leaning towards deciding to serve a full 8-year term, despite critics calling for him not to extend his time in charge of the British Central Bank. Experts believe that his stay at the Central Bank is critical at this time to stabilizing the UK economy post-Brexit.
Bank of England Governor Mark Carney is leaning towards deciding to serve a full 8-year term, despite critics calling for him not to extend his time in charge of the British Central Bank, according to news reports.
Deputy Governor for Markets and Banking.
Carney, who has come under fire from supporters of Brexit for his stance in the EU referendum campaign, has said he will announce by the end of the year whether he will take up an option to stay at the bank until 2021 rather than stick to his current departure date in mid-2018.
Well, of course, we should remember that initially when he came in, he said that he would serve a 5-year tenure rather than the normally prescribed 8 years. So in a sense, that wouldn't be a surprise. I think the difficulty would come because, of course, he had been making some noises, or he appeared to be making some noises that he could be prepared to stay the full 8 years. And of course, the issue between the Prime Minister and the Bank of England has certainly been amplified, or issues between the two have been amplified over the course of recent weeks. So if Mr. Carney were to leave on the original template of 2018, that could raise some risks that there was a degree of political interference or a loss of independence for the central bank, which of course would be damaging for its credibility.
Carney is due to hold a quarterly BOE news conference on Thursday and could make an announcement on his decision then.
The bank will be clearly looking at its updated growth and CPI forecasts and the assumptions of that bring forth in terms of the need for additional policy. So I think the bank will hold fire this week, but I think it is still very much the case that the bank remains mindful of the need to inject further stimulus probably into the early stages of Q1 17.
Carney continues to be criticised by supporters of Brexit for warning before the June 23rd Brexit vote of the likely hits to Britain's economy from a vote to leave the European Union.
Let's now head to the market, starting from Europe, where shares were lower in morning trade today as concerns over the U.S. election outcome intensifies and investors react to more corporate earnings. Conrad Brusen is DWTV financial correspondent and is joining me from the Frankfurt Stock Exchange. Conrad, it's great to have you on the show. Now, as we count down to the U.S. presidential elections, opinion polls show the gap between the Democrats and the Republican candidates are narrowing, and the global markets are becoming more jittery by the day. Tell us how the bourses in Europe are trading.
Well, Bulaji, shares in Europe are down, not only here in Germany, on most other European bourses as well. This report yesterday that a poll in the United States showed Donald Trump 1 point ahead of Hillary Clinton sparked a sell-off on stock markets in the United States, which continued then in Asia and continues today here. The price of the US dollar is on the downside as well. While on the other side, the prices for German government bonds and for gold are up. So clearly, safe haven investment is the word of the day. With every day that we are getting closer to the election, another economist or another market strategist and people like that are coming out with scenarios, what to expect from this election, and of course what to expect afterwards in terms of policies, in terms of how the economy in the United States will be governed, how trade deals will be renegotiated potentially. Also, the independence of the Federal Reserve is discussed right now, and it sure will be discussed after the election. Let's not forget that next Tuesday, not only the next president in the United States will be elected. Americans will also vote for all 246 seats of the House of Representatives and for about 1/3 of the Senate. And it's a combination of the outcomes of these economies that eventually will determine, economic and fiscal policies in the United States afterwards. That's why, so much is at stake, and that's why so many people all over the world are focusing on that date, November 8th.
Conrad. Now, the earnings are still trickling in. Germany's Lufthansa announced its adjusted earnings before interest and taxes, and that fell 6.5% in the third quarter. Hugo Boss also reported a drop in its third quarter profit as well. Persimmon's second half operating margin improved from the first half. What are investors saying about these numbers?
Well, the reactions on the markets are very different or diverse because the situation that these companies are in are very diverse as well. Let me start with Lufthansa, a full service airline which has to compete against many low-cost carriers, and that is very difficult for Lufthansa. One of its main competitors here on the domestic market or the market in Europe is Ryanair, a low-cost carrier. Today Ryanair announced that it's going to operate in future also from the Frankfurt Rhein-Main airport, which is the home base of Lufthansa, the most important hub that Lufthansa is servicing. Until now, Ryanair had only been flying to airports rather far away from cities and not the major airports. Now this is an attack on Lufthansa and something which investors obviously don't like. The share price is down. Hugo Boss coming in with very positive reports about a turnaround in its Chinese businesses, enormous cost cutting there. The company is in the process of concentrating on what it's known for, conservative but elegant men's clothing, and investors like the announcements. The share price is up at the moment 7%. Persimmon, the large builder from the United Kingdom, I think this is a very interesting example of a company that profited from the Brexit referendum, because after the referendum many British decided to buy real estate now. One reason was that the Bank of England lowered interest rates, mortgages are more affordable on the island, and also the insecurity about the future made people in the UK buy houses and homes. The company Persimmon is a bit more wary about the future, though. It also announced today that it's going to slow down the pace of land buying in the UK because it's expecting a slowdown there.
Now, data released by the British Retail Consortium shows that UK consumer prices remain unchanged in the fallout of the Brexit vote. House prices also remain steady in October. Do you think this may keep some companies back in the UK post-Brexit?
Well, first off, the fact that the retail prices in the UK were announced unchanged here in October is quite a surprise, because import prices fell for the UK because the people in the UK, due to the slump of the pound sterling, had to pay higher prices for imports. And the fact that the retail prices companies charged customers were unchanged means that companies put a lot of the negative price development of import prices on their own balance sheets, and this will probably not remain so. Inflation is expected to rise in the UK, and the crucial question will be how much of this retail businesses in the UK might be able to transfer onto customers. And this eventually will decide not only the future development of the UK economy, but also the fate of those retail businesses. This will decide whether or not they will have to cut back on capacities, on labor force, on merchandise, or whether they will be able to stay in the market.
Thank you so much for your insights, Conrad Busen, DWTV financial correspondent, reporting from Frankfurt. Now let's head to the crude oil markets, where prices fell for a full day on Wednesday as Jitters investors await official U.S. stockpile figures. The American Petroleum Institute says that crude stockpiles increased by 9.3 million barrels in the week to October 28, more than 9 times the amount expected by analysts. Now, the West Texas Intermediate crude was down 28 cents at $46.39. Brent was down 22 cents at $47.92. And the 10th International Gas Conference in Abuja is one of the platforms helping operators to examine the untapped opportunities in the gas sector. Some of the potentials of gas were explained at the opening ceremony by the Group Managing Director of the Nigerian National Petroleum Corporation, Dr. Maikanti Baro. According to the petroleum chief, about $51 billion investment is urgently needed to optimize the Nigerian gas market.
With the growth in infrastructure, gas was hitherto inaccessible and flared is now being utilized. Nigeria has seen the most aggressive drop in gas flaring from the peak of about 2.5 BCM a few years ago to just under 7.7 BCM currently, and it's reducing. In the next few years, we would have achieved flare out, that is zero flares from all the gas producers. Achieving flare out is consistent with the gas flaring initiative of the World Bank, which Nigeria has signed up. Beyond infrastructure, there has been a major focus on commercial framework for gas supply. Gas pricing has been adjusted to export parity. Legacy debt owed by the various sectors to gas suppliers are being extinguished through an intervention fund arranged by the Central Bank of Nigeria. Gas supply arrangements are being made effective with terms that assure bankability. These interventions are boosting confidence in the gas sector. A steady progress in this regard has been made, attaining an annual growth rate of 20% in consumption over the last 2 years. To date, over 1,000 kilometers of major gas pipelines have been laid and commissioned, comprising the X1, the open Ajamutar system, the Obi-Bono to Ascon. An additional 470 kilometers is presently under construction phase, comprising of the X2 looping and the Obi-3 gas pipeline, whilst a further 1,400 kilometers are in the project development phase, including the Ajamutar-Abuja-Kaduna-Kano pipeline, the QIT Obi-Bono-Okunafon Obi-3 pipeline, and the ELBS Ilorin-Ejeba pipeline, with a view to commence construction before the end of next year. With the effort in infrastructure development, we will have expanded supply capacity, establishing an integrated gas pipeline infrastructure grid across the entire country. With respect to the domestic gas sector performance, let me summarize it in 4 broad groupings, namely the power sector, the commercial sector, gas-based industries, and the CNG and LPG. About 300 billion scope per day was supplied to the power sector in the 90s. This has rounded up to about 1 BCM by February of this year. With just 9 power plants in 1999, we now have over 20 power plants in the commercial sector.
And that was the Group Managing Director of the Nigerian National Petroleum Corporation, Dr. Maikanti Baro. And Business Incorporated returns after the break.